Welcome to the Foundation for the Study of Cycles. My name is Lars and welcome to another weekly session of Cycles TV. What is on the agenda for today? Today I want to talk, based upon a community request, do an update on the cycles on gold and silver. And as we are live today, I would invite you, as always, please drop in your questions. I will take the time to review your questions here in the live session, so hopefully giving you some answers on cycles. What we're doing here, if you're new to this channel, we are talking about cycle analysis from a scientific educational point of view. So we're using current market data on whatever assets, so we switch from week to week the asset classes, and I would try to explain how at the Foundation for the Study of Cycles we use our cycle analysis techniques based on digital signal processing to discover current active cycles in these data sets and how to use the cyclic information in doing projections and forecast. The purpose is education. The purpose is learning something on cycle analysis while using real market data. That's it for today. Before we jump into the two topics for today, I need to remind you on the topics that we have two important updates from the Foundation. I'm sure you have seen that already. In case not, so here is the update. The first update is we have a new Cycles magazine published. It's there on our website page. Just go to cycles.org, follow the Cycles magazine. This is the new one we just have published 2 weeks ago. It's again full of content. It's free. Please grab this magazine. You will read very interesting articles about cycles from different authors and colleagues which are followers of the Foundation. That's the first topic. The second topic, for sure, and I'm sure you're aware of that, we are running our next Financial Cycle Summit next week. So if you've not heard about it, from time to time we are running also different events here at the Foundation. So currently we have run the scientific cycles event discussing scientific analysis of cycles, and almost every 6 months we are also running the Cycles Summit based on the financial markets update. So, and this is happening next week. Yes, next week. If you have not registered for yourself, please do so. It's valuable information. You will find the speaker's outline also on our cycles.org page. Jake, Peter, Bradley, Roger, Bill, Andrew Pancoli, Dr. Richard Smith, Ron Williams. So in most cases, my colleagues and partners here at the Foundation, and my very dear friend, Peter Eliades, which is using cycles for over 40 to 50 years and is using cycles for doing price projections based on cycles. So don't miss it out. It's free. Please go to the registration page to book your seat. That's a very important event and you won't be able to meet these speakers here alone. So that's enough for our self-marketing, to say it that way, but you won't find this quality of content anywhere else. Back to the agenda for today. Gold and silver, daily cycles update. Today will be a quick one, so don't expect too much. I will just give you a quick update. 4 weeks ago, approximately 4 weeks ago, we did the last update on gold and silver. So you can also go back to beginning of June. You will find it in the title section of the videos. We did the last one, so no 4 weeks have passed. Let's update the analysis. Therefore, just a shorter one for today. So we are jumping into our cycle analyzer view. So what you're seeing here is the technique and tools we are using at the Foundation for cycle analysis. It's a web-based application. It's available for every member. If you want to repeat this analysis, this is the ID you're entering in the dashboard. This is the gold futures data provided by Yahoo Finance. We just reuse this data set here for our analysis. In the left-hand side, we see current behavior of the gold price here up to Friday. So Friday's close data is here. And what we're always starting with is doing the basic spectrum analysis. So what the cycle scanner is running, it's automatically using all price information and doing a spectrum analysis on this chart data. The spectrum is provided here at the bottom of this page. It gives you a visual idea about which cycles are currently active. The first one you want to look out is for the most dominant peak in the spectrum. That's how to read a spectrum. Yeah? Looking for a clear, sharp peak in terms of amplitude, in terms of separation from left to right. It's a green triangle here, shows us that we have a good Bartle score, so the statistical significance of this cycle is good, while the strength is also good. So a length of 178 days. 178 days is the first cycle we should use here. And then we have two cycles, a shorter one with 146 days and a longer one with 244 days. So these three cycles, I hope you have seen them here. So these three cycles I've just marked here on the chart are the current active cycles on the daily time frame for gold. We will now use this information to plot and overlay on the chart sections. So we will activate 178. This is the first cycle we have been looking for. Then the shorter one, 146. And the longer one, 244. So that's now the composite cycle here, which I've just activated on the price chart here, which gives us a composite cycle forecast, which means that all three cycles are now added on top of each other, resulting in this composite overlay here we see on the chart. We are using around 1000 bars here for the analysis. So approximately the data from 2018. So 4 years of data for our analysis. This is how the composite looks like, the first important point. And that's, I repeat this procedure as this is not only providing you the latest cycle updates, it's also always repeating the procedure, the routine, what needs to get automatic when you do this, how to run it. And therefore, please forgive if you have seen this from time to time, but that's the purpose here. I need to repeat the procedure. The cycle overlay you see here on the chart is about finding the points in time when this asset, or in this case gold, seems to change direction in regards to their trend. You should not read this information here as absolute price projections. We're just looking for the points in time when the composite cycle turns. And then we can cross-check or validate if the turns correspond to also turns in the real price. So we just connect from a visual point of view. This top here is a top here in gold. This low here is a low here in gold. This low in the price is this low here on the cycle. Here we have the top. This is the top in the price. Here we have the low. That's the low on the price. Here we have a top in price. Here that's maybe a local low. Here you see we have here the local high. This is the high in the composite. Here we have the turn. There's no clear information in regards to timing. So to be honest, there's no real derived signal here. Could be this one, could be this one. So these are two cycles overlaid here. I would assume these two lows here. Then here's the top with this one. Here we have the low connected to this change here, and then that one. So what I suggest is do a kind of connecting the price tops and bottoms, yeah, with the connected composite cycle swings, which give you an indication about how exact or how the correlation between the real price swings are in regards to the composite swings pointing in times are. And this is about, I think, over 90% all swings have been perfect here. That's important. It's not about absolute price projections to the upside or the downside. It's about the timing of the relative lows and highs. So changes in trend in the relative terms to the absolute movement. So that's okay. It looks good. So these three cycles can explain almost all changes and trends in the past 4 years. So it was just a quick cross-check about these 4 cycles. The second cross-check, always important to do, is if we now look into the projected next turning point, and that's what you're looking for. Once you have validated the past information, we want to check, okay, what's the next projected turning points? You should not look too much into the future, yeah, when analyzing these cycles. You could plot the cycle almost to infinity into the future. It's just a mathematical calculation. But if we do cycle projection on real-time information, we just use it to look out for the next important timing point on our time axis, which in this case here is we are currently at an expected local low for the gold markets, with then the next expected top here in September. But that's a short-term movement, which is then turning downside also. So, and to now validate the readability of these 3 cycles, I would always then recommend to switch between all 3 cycles forth and back to see if this would alter the projection. Because if I now switch on and off a combination of these 3 cycles and the projection, so the current projection here, which should suggest that we are expecting a low here right now, it will now dramatically change this forecast. Then we should not trust the cycle analysis, because there are too many alternatives or too much variables which we can choose from, which we should not do. So therefore, I will now switch. You can monitor while I'm clicking cycles on and off, and you see what happens to the projected low. In this time, in this term here, I will now deactivate the midterm cycle here. But the low, I mean, it switches from the price projection, but not really from the timing projection. I need to be honest, I need to remove the drawings here, make it a little bit clearer to see. So now again, I switch on and off. Yeah, and I will just draw a line here at the center point here. And now again, repeat on and off. You see, can you make it larger? You see, while I'm switching here, the projected low will stay the same. Yeah, so there is really not much going on here if I'm switching forth and back between 3 or 2 cycles, which is good. It means that we can use this low information, and I will now do the same with another cycle. I will now switch on the cycle with a length of 146. So it's off and now it's on. And you can see it's also not very much altering the low projection. It shifts slightly to the left, to the right, sorry, a little bit more into the future here. So that's the second one, just to monitor. So switches on and off, but it's not a big change here, yeah, switching between these 2. So now let's do the same with the third, the longest cycle with a length of 244. And now you see it switches a little bit or to be honest, if this is the center here, there's also not much change here, a little bit to the left. So we can maybe put this one here in. So that's it. If you switch them for, you can also now select them individually, which means that this cycle here, this is a big difference here. If you only use the cycle with the, it switches the scale, so I need to be careful. So this is just using the, I need to be careful here. I need to, no, that's the longest one. It might trick you, so you need to monitor. So this is September, the low is September here. Just using the 178. The low is July, and the shorter one here is also July. So the projection area for a possible low is now clearly seen in the area July, August. And I think that's the same projection we did back in beginning of June. So it looks like gold might find at least an interim bottom now at this price point. And then we might see a reversal to the upside from the local projection here. Take this, or put this please into account of the long-term cycles, the weekly cycles. The weekly cycles are turning down even for a longer period in time. So please also take this into account. So that's gold. Let's now switch to silver. So just cleaning up the chart here, switching to silver. Let's load our silver data here into our scanner. That's the current movement. We again have 2019. Whoops, that's silver here. Okay. Let's add all data here. So, but it's really a matter of adjusting. I will get back to this later here. So 4 years, 1,000 points. That's the silver cycles. Let's look to the spectrum. The spectrum shows us 3 peaks here. One is the same. I don't know if you remember it, but I do. This cycle here with a length of 146 days was seen the same in gold. So 146 is the same cycle length we also have in gold. The one here to the right is a longer term 114 in gold. If you remember, it was 140, so 10-20% deviation. And we have a shorter term cycle, which we didn't had seen in gold, which is about 100 days here in that case. So we should work with these 3 cycles here on gold, silver, sorry, 103. Okay, 146, the same as in gold, and 214 here, which is this one here. So, which is giving us this projection here. As always, let's do a quick recap of past turning points in regards to the change in trends here, which have been forecasted. So I would just do it quickly here. So the way how just quickly to validate. Okay, so I've just visually and very rough connected the tops and lows of the composite with the real data, which, and now this is the interesting part, is showing the same projection as we had in gold, right? So the daily cycles here show, similar to what the gold cycles did, a possible low currently now happening here in gold with an upswing potential into the summer. Let's now do the same cross validation with deactivating different cycles. No big update in switching this one on and off. No real change in current low at this one here. And let's use the third one. Also no major change here. So just to repeat, even if the overall look of the composite is changing while switching between them, the timing projection for the current or the next important change in trend is not changing while switching. So this is what you have in mind. I'm also looking for a change in the timing, not in the absolute movement here. So also said that it's showing us similar situation. So the takeaway from both analysis should be gold and silver are positioned for a reversal. I would not expect a big upswing as the weekly cycles are still pointing down. I'm not doing this analysis right now. I did this in the June session. So please review the beginning of June also to get the full picture. So that's the update on gold and silver for today. I will now take a look at your comments in the chat. So let's have a look at that. And I think there's one from PhotoHops Habab, not easy to pronounce. Last update, you said that gold is topping. So I think that's not correct, or at least you need to think about the weekly cycles have been topping. So the long-term projection, that's always what I tried to bring into the picture here. The long-term gold cycle has topped already. So that's why I said if we now see a bottoming in the daily cycles, you have to be careful. I would not put too much projection or at least attention to that, as it is in an environment where the longer term gold cycle is topping. So that's, I think, what you need to take into context. And on the 6th June webinar on silver and gold, I used a date of the past to see where the February situation was. So I think in February I showed you that we should expect the top in March, April, which then exactly happened, which is in alignment with the longer term cycles in gold topping. And now we see the daily cycles. So I hope this gives you an idea of the current update. So exactly, Martin, and this is what I meant to set into perspective. The weekly for gold looks to show a declining curve towards the end of the year, which dominates weekly or daily. So the shorter term cycles always need to put into context of the longer term cycles. So from the digital signal processing, you never know which is more dominant, but I would always see it as cycles within cycles. So if the weekly cycle points down, I would look for situation where these daily and weekly cycles get into alignment. So the next point when these cycles align is also when the daily cycle starts to turn down in direction of the longer term cycles. Right now, the daily is projecting an upswing, but we don't know if the up leg of this daily cycle will overrule or the force will be higher than the still continuously downwards pointing weekly cycle. Often, this might just result in a sideways movement. So the downtrend for gold from a long-term perspective might be stopped for the next, I think we projected the top in September then getting back. So maybe in July, September, we will just see sideways movement based on the daily upswing and the weekly downswing, which then negates each other. And then the next interesting point, Martin, is not to use every daily cycle. So use cycles within cycles from a timing point. So do the daily analysis I did. I think we need to cross-check when the top is, and when it aligns back, it syncs back to the weekly cycle. That's what you should be looking for if you use long-term and short-term cycles. Okay, let's cross-check other interesting questions here. I think the real estate cycle, I owe you some real estate topics. So the real estate cycle is anyhow something I need to bring up here. Therefore, I just need to prepare some real estate data. Please look out in the live stream title descriptions when this projection will show up. Let's see the other questions. Maybe let's also have a look at this topic here. The QQQ cycle is showing up on weekly and daily, direct opposite to other index. How can it be so different? That might be a situation when you cannot trust cycles, and the point you brought up is very important, because you always need to cross-validate detected cycles with the approach in related and also in indirect related asset classes to validate a cycle. Cycle analysis will never be exact and will never be able at each given point in time to show you the exact cycles which are active, which are dominant, which you can follow looking into the future. So this would be the holy grail if this would be the case. But in order to, so the key of cycle analysis, and maybe I think, Alan, we talked about this a lot of times, the key in cycle analysis is not pulling up whatever digital signal processing, looking at the spectrum and then selecting a cycle. That's more or less easy to do. The important knowledge is then to differentiate when to follow a cycle projection and when to not follow a cycle projection because you think it's not valid. And this is the case, the question you bring here up, this is the case when we just don't have valid cycle projections you should use. So, and that's quite often the case. So I think it's really a question. I think no one will find an answer to why it can be the case. But if it is the case, just grab this analysis and move forward to other asset classes and try to look out for cycle analysis which are in alignment if you use different correlated asset classes. So that's what you brought up as an indication to not use the cycle analysis for any forecasting. So it's also good to find this without giving you the clear answer for the reason. So, but I hope it clarifies at least a little bit. Yeah, Michael, another interesting question. How does policy change the cycles? For example, money supply for the last 10 to 20 years. There is a relationship for you. I think they won't change the cycles. So also money supply will follow a cycle which you could and should analyze, and these cycles then interact with each other. So they might influence, but they will not overall change at least the dominant cycles. So if we have too much or a lot of policy or big policy changes happening, this might blend the cycle, or which might then overrule the current cycle, which will then not become visible because the individual implementation or the individual activities which might be seen from different participants might just then phase out a cycle which would otherwise be prominent. So I think the way how policy changes influence cycles is they could amplify cycles a little bit so it gets more visible because the cycle will be there anyhow, or it could just blend the cycle because the policy change is so dramatically that you won't be able to see the normally active cycle out there. So that's the main view I would try to think about this relationship. So it's a kind of way to overlay cycles, and if this is a large change, you won't see the cycle, or if it's just slowing down the overall changes, and then the cycle will again become more visible. But the cycle itself will be there anyhow. That's at least a try to give to your question. Okay. That's what I bring up. So the real estate cycle. Okay, so I just need to scroll down. I think that's it for today. So please excuse that that was more, running 30 minutes, a short update on gold and silver. I hope you like the quick update. So this was just a quick update on gold and silver related to the June 6th last update on gold and silver. Please join us next week. Please follow the Financial Summit next week. Register yourself. It's a great place to be. Read the magazine. So there's a lot of content you can discuss, and we will meet again next week, Monday. Thanks for joining me today. Subscribe, like, leave a comment, whatever. You're welcome. I hope to see you next week. Bye.